Did you lose money trading on Friday? Did you short the markets on Friday at all? If you did, then you want to be sure to watch the next 1, 2, or 3 videos. I'm not sure how long it's going to take, but I'm going to try to review some important information, not just for anyone who might be passing through on YouTube. We do want to bring awareness to what it is we do and how we approach the markets. But I also make this available for our members, our long-standing members, our midterm members, and even our new folks. It's good stuff. It never gets old. And it's critical to understand in order to trade for a living. Now, let me draw a vertical line for a moment and show you midnight. This is Thursday, and this is midnight, and this is Friday. This is a Renko chart on the Russell 1 point. A custom, actually this is an original Renko. This isn't even a custom. It wouldn't look much different. In fact, it may only be more pronounced with a custom Renko. And the question is this going up or is it going down? Why would anybody have shorted this? Now, you do need to ask yourself, and I can't fully appreciate what it is you're trading. Are you trading intraday, meaning you're putting a trade on with the expectation of making your money and being in cash on the end of the day? Are you trading overnight? Are you trading for a 2 or 3 day swing? Or are you trading options for a 2 to 3 week period? If you're trading intraday, there was no reason at all to short this market. If you are trading on a swing basis, you don't have the information on this chart. You don't have the information to make that decision, and you certainly don't have the information on this chart when it comes to an option. So I'm going to address in the next remainder of this video on YouTube, and if I need a second or a third, I will. Please understand that the YouTube videos are not nearly the quality that we have, so please adjust the settings in high definition, and I'm going to give you an education not just on Renko. It could be Renko, it could be point and figure, it could be custom Renko, it could be mean Renko, it could be a Kagi chart, it could be a 5-minute chart or a 10-minute chart. It really doesn't matter. Intraday, you want to go where price is going. So how is it you could have shorted any of this, right? Well, I'm going to put some indicators on and some strategies, and I'm going to explain what the difference is. And I'm also going to explain, in general, some of these are proprietary, but in general, I'm going to explain how it is they work. Now, the first thing is that whatever it is you're using on a chart, and from wherever you're getting it, you need to understand what the study or the indicator is designed to do. What is it designed to do? If you don't understand the indicator and you don't understand what it's designed to do, and then you couple it with a second one or a third one or another time frame or another chart, all you're doing is complicating your life. Okay? And sometimes you can't see the forest for the trees. Now, right now, we don't have anything other than the marker for the day, right? We just have this trend up. Now, before we go much further, I want to address something very, very quick that's also very, very important, whether you're trading intraday or swing trading or overnight. So let me explain what that is. Okay, I have made videos of this before. It's what we show our newest members virtually on day one, maybe even before they join. It cannot be repeated enough. And we're going to review it again. And if you're a member, especially if you lost money on Friday, intraday, I think it's important to review. There are only, let me put it this way. Well, let's start first with the market itself. The market is not a human being. The market doesn't have feelings. It doesn't have greed. It doesn't have fear. It doesn't have a memory. It doesn't know the difference between one day and the next. It is what it is. It's something that goes up and something that goes down. Doesn't matter necessarily what it did the day before. It doesn't know. Sometimes it appears extremely random, extremely choppy. Other times it appears to look as though it knows where it's going, up or down. It knows no limits. It can go up as high as it wants to go up, and it can go down as low as it wants to go. And it can do it on a time frame that is extremely slow or extremely fast. And from one day to the next, there's absolutely no definitive way of knowing for sure. There isn't. There is not a Bible code. We have systems. We have something that we call the swing machine. We make it very clear. It helps us map the market of where it is, and from there we try to make some prognostications about risk, about where do we place our stops and where do we place our profits. But there is nothing within the swing machine. There is nothing within anything that exists that can tell you definitively where the market is going to be in the next 30 seconds, the next 30 minutes, the next 30 days, or the next 30 years. It does not exist. That said, with a market that goes up and a market that goes down, there are only 4 possible ways to trade. And you don't have to do any of them. Number one, you don't have to come into the market. And if you do come into the market, you can choose one of the 4, 2 of the 4, or all 4. But there are characteristics that you need to know what those 4 types of trades are. So let me explain very, very briefly. The first style of trade is to follow the trend up. Trend following long. They say that you can make money in your sleep. It's the easiest way to make money. Trend follow and to trend follow up. I wouldn't disagree with that. But let me explain something. Just because you get on a trend and you're in a trend, it doesn't mean that you're not going to have a drawdown. A drawdown is a pullback from the highs. And maybe you entered here, and when the market has a drawdown, it's no big deal. But if you enter here on the trend and you get a little bit of a rise and then it pulls back, this drawdown will put you underwater and will test your resolve, will test your acumen, will test your fear, your greed. Do you think you made the right decision? Do you think you made the wrong decision? The truth of the matter is, when you enter on a trend following long, you only need to be right about 40% of the time, provided you stay in the trade. Because generally the trend will continue on. Now, if you enter the trend here and exit here, you lose. And if you enter here and we pull back again and it goes on, you will lose money. So where and how do you know when to get on the trend? The same is true when we're trending down. That would be a downtrend. This would be an uptrend or a counter trend. And here's the continuation down. Same is true here. So it's always easier to look back and say this is an obvious uptrend, this is an obvious downtrend. But when you're in the trade, when you're looking to enter, you need to understand what the characteristics are and what will be expected of you, because there's going to be something expected of you. So for instance, if you enter the trend follow, fine, you've got to expect there to be a pullback and then continue, and a pullback and then continue. These are counter trends. Counter trends. Now, trend follows a slow or a low winning percentage, but a very high payout. Counter trend trading has a very high percentage of winning, small payouts. High percentage of winning, but smaller payouts. But they are absolutely critical when you put on a counter trend. If you don't know where the exit is, you can get carried away by the trend and get destroyed. On the way up, we call it buying the dips. On the way down, we call it selling the rips. You need to understand that. So if you, as a person, have a psychological need to be right, that you want to be right a lot, that you want to trade a lot, that you need to win 75, 80% of the time, then you might want to be a counter trader. Maybe. Maybe. It also depends on time horizons. But you must have extreme discipline to exit and to admit that you are wrong. If you are a person that has a need that desires to be right, matched with a stubborn streak that you cannot admit that you are wrong, you will go broke. Now, this YouTube video has just exceeded 10 to 12 minutes. We're going to stop and we're going to discuss this in video number 2. If you've liked what you heard thus far, then you want to be certain to see and hear the next videos. I'm Bag of Don at StockMarketCaddy.com.